All right. Testing, testing. See if anybody's out there. Hopefully people can hear me. Then we can get started. And we'll see what happens. Oh, I'm in the mood today. All right. We'll figure it out. We'll get through this. All right, let's see. First, wipe out. Nobody? Okay. Oh my God, I'm going so stir crazy in my house. Ah, finally. Okay, people can hear me. So now we start the video portion of our presentation. Let me know when you can see that and we can get this party started. He's in the party, something, something. Something, something about a party going on. Dun, 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 dun. Nobody can see my screen? That's not good. Oh, and now people, it's weird. Just at the exact time I get impatient. Okay, let's get going. Well, that didn't work. Why isn't
Access to this webinar is for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither PhilStockWorld.com, PSW, nor its affiliates, nor any of their respective officers, personnel, representatives, agents or independent contractors or in such capacities licensed financial advisors, registered investment advisors, or registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any losses you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right, fantastic. Time to go. All right, so where are we? We have a little bit of a sell-off going on. That's not it. What is this? Oh no. Ugh. This is not working. Well, we are having a little sell-off. You have to take my word for it. Futures, 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 futures. Here we go. And if we refresh this on the hourly, as you can see, we have slipped considerably from the open. So 3,700 has not held up. And we were doing pretty damn good, though. We were way up at these highs. Look how amazing those are. And here's what's happening now. We'll see where we follow through to. This is because there's still an impasse about the stimulus talk. So if there's no stimulus, what are we all excited about? And I wrote about that for the last couple of days, so I'm not going to get too heavily into it. I'm just like, it's 100% stimulus-driven economy, and you think we can just keep putting money into the economy forever and ever and ever, and there'll never be any consequences? Then whoopee, let's be bullish. But I just can't get behind it. I really can't. This is just all crazy stuff. And mostly I can't get behind it because of this. Okay, so here we are. We do this on a regular basis. So let's take a look. Not Netflix. How did Netflix get there? There it is. I don't watch Netflix on this TV. All right, anyway, so last week it was 13.7 million US cases. 13.7 US, 64.2 million worldwide. And there was 1.5 million deaths plus 272,000. Oh, well, I guess we'll do that. 272,000 in the US. And now, so that was 12/2, and here we are in 12/9. You know, remember what we look for is if the trend is accelerating or decelerating or whatever, right? So here we are a week later, and we are at 68 million. So 4 million more people worldwide got infected. In the US, 1.5 million more. 13.7 to 15.2 is 1.5 million more. Out of 4 million people on the planet that got infected, 1.5 million, which I believe is he says, I believe, I'm not sure. 2.5, so that would be 3.5 of 1 point, about 40% of the people who got infected. Yeah, that's right, 40%. So 40% of the infections on the planet Earth are from America, which has 3% of the world's population. We are responsible for 40% of the infections on the planet over the course of the past 7 days. On the death basis, global deaths didn't go up much. They went up about 62,000 total deaths. But in America, 10,000 of those deaths were right here in the US. Wait, yep, 10,000. That's actually, no, oh, sorry, 15,000, not 10,000, 15,000. 2,000 days, our average last week. Although now we're hitting 3,000 days. So in the course of a week, our death rate's going up like 50%. So of 60,000 deaths in the world, 15,000 of them, 25% of them are in the US. So 40% of the new infections, 25% of the new deaths, all coming out of America. I don't, you know, we live here. And I guess it's hard. I know back in the 80s, I had a friend in Russia, and I used to say to him, I was like, how can you live there and not see how messed up it is? And he said, doesn't seem that bad. And I guess that's what it's like. I mean, I guess that's what it's like here. We're here. We live in a place that, here's the 10 most affected countries on Earth, and here's us. And here are the other 9. These are the 10 worst, most affected per day, case count on the planet Earth. And here's America. Not this is 4 times that line. Nobody's even at that line. This is 4 times higher than that. And these aren't small countries, obviously. You have to be a decent sized country for this to happen. This is Russia, the Ukraine, Brazil, Germany. Brazil's got 250 million people. Germany's got 70 million people or something like that, or 80. I don't know. Who knows how many people in Germany? No, Germany's got to have like 100 million. Iran, plenty of people there. India, way more people than us. Italy, that's a disaster basically from their size. Turkey and the UK. But nothing that even compares to what's happening in America. You know, this is real, and this is happening. And we're only just seeing the beginning of the effect of Thanksgiving. That was 2 weeks ago. Was it even 2 weeks ago? Anyway, in the general vicinity of 2 weeks ago. Thanksgiving was this Thursday, right? So yeah, basically just a little less than 2 weeks ago. But 2 weeks ago, you don't know how many people got infected from Thanksgiving. You're just starting to see the numbers come in just now. And we'll be hearing about them for 2 weeks to come. Then it's Christmas. And people are going to get together for Christmas too because they don't care. And they're told because a vaccine is coming and everybody's going to be great and you don't want to do anything anymore and blah, blah, blah. That's not how it works. We are way, way, way far from this thing being over. And it's getting worse and worse and worse. And, you know, the problem is we let ourselves get distracted by this nonsense. But they talk about a vaccine, they talk about this and that. They talk about Biden coming in and fixing everything. It's like, how can, you know, you could have like the California forest fire, right? And you can go get the best firefighter on the planet and give him the best piece of equipment on the planet to come in with, and even give him a whole team of guys to work with, still isn't going to put the fire out. Okay, that's what Biden is. Biden come in with the greatest team of people behind him, and they can have all this incredible equipment ready to go the second they get there. And do you think the fire is going to be out the next day? No. It's still a massive, massive effort, even if it's complete, even if you couldn't possibly do a better job. It's already completely out of control. This is already out of control. And you're not seeing the full economic impact of this because we keep covering up the damage with stimulus and so on and so forth. But you've got, you just keep propping up the patient and improving the vital signs so that nobody understands how injured he really is. But this economy is drastically injured, and so is the global economy. And these companies that we're investing in are part of that global economy. And our solution is to just run up our credit card debt, our national credit card debt, to insane levels. And you say, oh, well, it's an emergency. And don't worry about it. It's an emergency, but at some point, someone's going to have to worry about it. You could have a fire in your kitchen, and you can use your credit card to buy a fire truck for $180,000 and have it transported to your kitchen and put out the fire. And damned if that solution doesn't work, but after that, you got to pay the $180,000 bill. And we're so not there. We are so not doing the right things. We have not even begun to put out the fire. This is putting out the fire. This is putting out the fire. This is putting out the fire, although not the best job because it's coming back in Brazil. But still, they've done something. They've done something. They've done something. They've done nothing. These are just normal retracements. When they come down, they're normal retracement patterns that are getting less and less and being overwhelmed by the overall surge. The airlines want you to fly, and the movie theaters want you to come back. So now we've got like capitalism against science. Don't shut us down. That's a Republican mantra right now. Don't shut us down. You can't hurt the economy. That's America. Why is the economy America? Why aren't Americans America? Why is the economy more important than the people in it? Isn't it a function of the people? And the fact is it's not, right? It's not, because, as much as a slave counts as 3/5 of a person in the Constitution, a consumer counts as 3/5 or less of an entrepreneur or a business owner, right? We don't count people. The regular average working people don't count in this country. They don't matter. They're not being represented. That's kind of obvious in this election, but they're not being represented. And this is a real sickness. So I don't know where this is going to end, but I'm really not that enthusiastic about these things. So let's see. So meanwhile, right? Oil. We have this thing, but I don't know what the reality of the EIA report is. Let's see if we can find that out, because it showed earlier this morning showed a 15 million barrel build, and so hopefully they got the report up. This is the current report. So imports average 6.5 million. That sounds right. Blah, 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 blah. Okay. Commercial inventories increased by 15. I don't know who said that it wasn't true, but here it is. This is, I don't understand. If it's not true, they would have revised it by now, right? They only just printed this at 1 o'clock. U.S. commercial crude oil inventories. I would say the rumor that it was false is probably what is false, and that the reality is there was a massive build in oil. And that makes sense to me, because realistically, what the hell are we doing? People didn't go anywhere for the holidays. Too many people got together, but I don't think they made any big trips. So I think the report was false is what was false, and we're probably going way down from here. I don't know if I want short oil, but you could really. I mean, 46 we know to short oil anyway. You know, I guess if it breaks lower, I guess it's shortable. If it breaks below 45.50 with a stop, I would certainly short it, and then keep a stop when it goes below 45 tight. But if this report is true, and I have no reason to think it isn't, and please speak up if somebody knows otherwise, but if this report is true, this is a complete disaster for oil, for demand. 15 million barrel build is an entire day's use. Total gasoline inventories increased also, so that's now 20 million barrels basically of build. Distillate fuel increased by another 5. Oh, come on. 25 million barrel build. Are you freaking kidding me? That's pretty insane, guys. But here's the number here. You went from 19.2 to 12.1. That's actually no, 19.92. So that's 8 plus 12 is 20. The total build is 20 million barrels in a week. But wait. Oh, from last year. Okay, from last year. Okay, forget that. From last year, though, we have 100 million barrels more than last year. 5% more oil than last year, basically, overall. And we're still exporting 2.85 million per day. The refineries weren't even producing that much. We didn't even supply a lot of product. We supplied 19.3 the week before. We actually dropped in our product supplied by 400 million a day. So that's 3. So we produced 3.3, about 3.5 million less barrels. Or let's say 3 million. So we produced 3 million less barrels this week. We exported just as many. And we still have this massive build. That means that their demand is so off the rails. I don't see how it's going to quickly come back. I really don't. I think this oil chart is way too high. This morning I noticed, so there was an article about the energy sector having come back a lot. And I think that's a good bet, because that's a good hedge, because that's a recession hedge and a hedge on the use of energy in the first place. Where did I write that? La-di-da, it's one of these. Oh, energy stocks. XLE off to another strong start. Blah, blah, blah. Blah, blah, blah. So the Drexion S&P Oil and Gas Exploration and Production ETF has surged 65 cents over the past month, highest level since June. So that's interesting. That might be an interesting short. Let's take a look at what that's been doing. So that's called Gush. Yeah, well, on the other hand, though, it was just super low, right? Because it was higher. We need a bigger chart. Got to keep things in perspective. Wow. Okay. So what is this? Oh, this is new, this thing. That's why it's not reading properly. Is it? Isn't that weird? Something's broken about this chart. Well, that's a shame. Can't use it for much, can you? Look, it stopped functioning somehow. Isn't that weird? So why talk about it when it's such a broken little thing? And take a look at XLE. That's more realistic. So XLE, yeah, but also so low, right? So it was all the way down to 30, and now it's back to 40. So it's up 50%, but it's up 50%. It's still down from from 60 last year. So I don't think it's an easy short, frankly. It's not that good. I'd rather short the oil itself. I think the oil short is a better move. But anyways, that's like devastating. That's a devastating number. Now it was interesting though, because see in the chat, I posted this about the oil report up here, right? And then on BNN, they are saying the oil bill is incorrect as a result of a decimal error on increased imports. I see no, we see no such thing in the actual EIA. Increased imports. Well, here's the imports, and there's no decimal error, and it wouldn't make any sense anyway. A decimal error would throw this thing off by much more than 10 million barrels or so. So apparently, whatever they were saying on BNN was incorrect. Oh yeah, I'm going to be on BNN tonight at 7 o'clock. I'm going to be on Money Talk from the article I wrote yesterday doing the trade of the year thing. They taped that yesterday, but it'll be on tonight. So anyway, but this is the point. This is a number you can measure. You can see a drastic downturn in the use of oil. If you're building 100 million barrels over the course of a year, that's an average build of 2 million barrels per week, right? For the year, 2 million barrels a week is the average build. So therefore, we're using 2 million less barrels per week. And so it's not that much less. But we're also producing less. We're producing, well, compared to last year, 18.9 to 20.4 is 1.5 million per day less. So basically, I would say to average out to roughly 10, we're using 10% less overall oil than we were last year. Now, part of that's efficiency, but a lot of that is basically just that we're not traveling. There's not as much economic activity as there was last year. That's very, very obvious on the whole. And it's not being taken into account. And another, you got to think of the thing, what's real? And you got to stop reading the noise and start saying, well, what's actually a fact that I can look at and say, this is what's actually happening in the market. Where is my good thing? Oh, here it is. Like, where's my good chart? So if you look at, forget the S&P and all the bullshit, right? You look at Berkshire, if we can. Berkshire, would it be dash A, do you think? Oh, it won't be equal A, I tell you that much. Frick. BRK. K point A. Oh yeah, there you go. Okay. So, you know, Berkshire's a good proxy for the S&P, and if anything, they're better than the S&P. You know, Buffett's companies are generally cream of the crop, and these, you know, don't forget, these are the ones these are his ownership companies. It's a little weird because it's the ownership companies that he has, and it's also the stock market portfolio that he reports. So he's got two ways of making money. But on the whole, it's a pretty good proxy for the S&P since the companies he owns are also S&P companies. So if we run that quarterly and we look at it and we say, okay, so here's Berkshire Hathaway, 60 billion, 56 billion, 63 billion, right? Here's Berkshire Hathaway, we start in March, 58, 62, 63. So zero growth. Here's the first 3 quarters of 2018, first 3 quarters of 2020, no growth. 62, 56, 63, 63. How about 2019? 60, 63, 64. 61, 56, 63. No growth. How about profit? Income. Well, that was bad. 12, 18. We'll have to throw that out. So 12 and 18. He did make more money. He had a woof. Jesus Christ. Except for this huge loss here that offset it. But 26 and 30. So whatever the hell happened to them there. Oh, you can't really go by the profit because it makes no sense. I mean, you know, minus 50, and then he got some of it back. We made 6 billion total here. Here he made 50 billion, and here he lost here and made 30, so 29 billion. So 29 billion here, 50 billion here, 6 billion here for 3 quarters. So no improvement in revenues, no improvement in profits. That's going for 2 full years. So then you look at the chart and you say, well, what would you expect the chart to look like if you made no profit for 2 years? So here's 2019, or what do we look at? 18, 19, and 20, right? So here's 2018, and here's 2020. And we went from basically, you know, I mean, that's a spike, so it's hard to say. Let's say probably here. So 300, went from 300 to 340. So he's up 15%. Even though he's not making any more money at all. Making less money, having less revenues. And you can look at lots of companies that way. Let's take a look at Amazon, for example. So here's Amazon. 2010, wait, 2010. Oh, because we're got a little quarters. I'm like 2010. 2018, 50, 50. So we got 6, call it 6 plus 2 plus another 1 is 10 plus 1. So let's say 11 billion. I mean, sorry, what am I doing? So it's 150, 161 here. Then here we've got 60, 60. Here's a lot more. It's 180 and maybe 11 more here. So 191. So 161, 191. And here it is a lot more. 180. Well, Amazon, of course, is bucking the trend, but here you go. 180, 190. 4 and call it 200 and 270. Holy shit, that's some good growth. The income growth, 11, 11 and a half, 12, 15, let's call that. And here we're looking at more like 3, 4, 5, 6, 8. So it went from 8 to 15. So that's double the profits, pretty much double the revenue. So they should be double. Got no problem with that. They should be doubled up from where they were. And again, you're kind of smoothing it out because you're assuming it doesn't matter whether they were overvalued, they are overvalued. Just say that, look, at least they justify going up 100% from that point, right? But when you look at what Amazon's actually doing, from 2018 or 2019, we just looked at the change, from 1640 to 3190, that is double. So they're not unjustified in that one. And that's how you got, but that's how you got to look at all these companies and figure out, like, where are they really? What have they actually done to get to a certain point? You know, let's look at Nike. Here's another company you would think would be pretty much steady and make some sense. But if you look at Nike, Nike's up. You already know it's up from 65 here to 80, 90 here, and now it's at 140, though it's up 50%. And in any ways it's being justified. So we look at Nike and do quarterly. And Nike was running 2018, 9, 18, 19, 29, let's say. Then we've got 9, 10, 20, 30, 31. So 29 to 31. And then we go 31 to a lower number, obviously, to 26, 27. So that's down. Obviously, profits are way down. You can see that right here. So profits are way down. So there's Nike. So and what do we have? So in other words, revenues are down, profits are way down. But where's the stock? Oh, damn it, every time. There it is. Nope. Why am I losing these things? Where's he? Oh, there they are. Okay. But the stock is up 50%. I've done this before. We've done exercises where we do this. You got to go through the S&P 500, at least the top 20 stocks, and say to yourself on each one, is this justified? And if it's not justified, then there's something inherently wrong in the index. And you can go through, in the NASDAQ, you go through the top 10. I mean, the top 10 stocks in the NASDAQ are like 75% of the index. In the S&P, not so badly, but in the NASDAQ, it's almost the whole index is the first 10 stocks. I mean, Dow only has 30 stocks. We go through every one of those. And the money's just not there. There's no justification for this move, so why do you want to participate in it? Here's Travelers, they've gone nowhere. That's interesting, right? Wonder how Travelers is holding up. I'm just seeing like obscure Dow stocks. Whoop, not there, that one. TRV. As is insurance, you would think insurance would be pretty steady, right? And maybe that's why, maybe it is steady. So we got 72, 74, 77. I'm going to add them up. 76, 78, 8, a little bit better. 79, 74, 82. It's actually holding steady. So they are holding steady. The income, income is 14 here. Income here is 8, 12, 17. That's a big difference higher. And the income here is let's go 7, 12, 19. So they're actually steadily declining. They go from 19 to 17 to 12 in earnings. So 19, 17, 12 is a serious regular decline, yet the stock is actually kind of holding up. Doesn't make sense. Why? And obviously it means that you're paying much more money per dollar of revenue and per dollar of earnings. Okay, they're not all bad. Amazon is obviously doing phenomenally well. Now, are they only doing well because of the virus? Will Amazon keep doing well or this well when the virus goes away? Everything played into Amazon's hands right now. You know, the virus kept people at home. The companies had to expand the use of cloud systems, and also the cloud systems have remote maintenance. You don't have to worry about people showing up. You don't have to worry about your IT staff and so on and so forth in the office. It's a huge boom for Amazon between the IT thing and the cloud services, and also everybody staying home and getting Prime Video and all that. It's been amazing for Amazon. Could not possibly be a better situation. So they have grown into their market cap. Oh, I'm sorry. I don't want to say it that way because they haven't. They're still trading at 100 times earnings, but at least it's keeping pace with the 100 times earnings they were at 2 years ago. Other companies have gone the other way. They used to be at 20 times earnings, but now they're trading at 40 times earnings, 50 times earnings, 60 times earnings, and people are still buying them. It's not a good use of your money. You know, and you say, what is the better use of my money then? Hey, sometimes it's cash. Sometimes it's not doing anything with your money. While I'm talking to you, the Dow is now down 180 points while we're talking. It's so easy for it all to fall apart because there's no real support. The only reason that we were up is for stimulus. You take away the stimulus, you got nothing. You got nothing to point to. You have nothing to fall back on. You've got a weak economy, poor demand, damaged consumers, extended credit, government debt. What the frick are you betting on? More stimulus that we can't afford. That's the entire bullish premise. You know, yes, the virus will go away, but these businesses are devastatingly damaged. The consumers are devastatingly damaged. We're still down 10 million jobs. 10 million jobs out of 160 million jobs still missing from the workforce. That's huge. Ordinarily, that would be a crisis all by itself. It's just a little teeny thing that we're considering in the grand scheme of crisis everywhere. NASDAQ is down almost 2%, by the way, right now. Because without stimulus, what are we? And that's why yesterday I said on BNN like 5 times, we are cashy and cautious. We are very, very concerned about a pullback in yesterday's post for the money talk portfolio. Where are we? So what did we do with the money talk portfolio yesterday? We're up 52%, 51.9% for the year, whatever it is. Anyway, we're up 52% for the year. And what do we have? We have Ford, but Ford has paid us. Let's see if I make this a little bit bigger. Control plus. There you go. All right. So we've got Ford, and Ford has paid us 82% of the money, and we still have a year to go. Kill it. Not worth holding anymore. All we're going to make is 24 cents by holding on to it. I'd rather find another spread we can sell for $1.35 and make that money over the same period. Gold, same thing, 71% paid off. It's not worth holding. IBM, well, I'll get into the specific in a bit. Viacom. Now, Viacom's another one. It's paid most of the money that we could possibly make on this trade has already been realized. It's too far in the money because we were very conservative, and we also doubled down on it at some point. But it was a nice conservative play. Well, I don't think this portfolio we didn't double down because we picked it when it was already beaten up like crazy. But we already made tons of money on this thing. We made 29 minus 23 is 6, and 4 is to roughly $10,000 plus on this trade. And we started the trade, it was only 18 minus 16 is 2,000. So $2,000 trade, we made over $10,000 in profit. All right, we're done. That's it, fine. How big is this spread? It's only a $14,000 spread. We've made most of the money. There's no need to hold on to it anymore, okay? We're better off with the cash and finding something to do with the cash, especially in an uncertain market. So, oh, IBM I talked about above. We should talk about that because that's still a great trade. That was up here. That's on 11.1. Right, all right. Oh, okay. So IBM is still playable, is what I was saying about IBM. No, I thought I summarized it there, but I didn't. So what am I talking about? If you look at the IBM trade, it's a 110, 140 spread. So it's $24,000 for this spread, right? That's how much the most you can make out of this spread is $24,000. That's what you would net. So what your hope is that the spread becomes $24,000, $30 times 800. And obviously the short puts would expire worthless if we're over $135. How much is it currently? How much is this net currently worth? It's 16720 minus 8610 minus 5260. So it's 2850. So currently the spread is 2850 out of, what do we say, 8 times 30 is 24,000. There's actually more to gain than I thought on this one. So it's minus 24,000 is the max. So this spread, as it stands right now, because IBM is not in great shape, it's at 125, and we have a 135, 140 spread. So you could make $21,000 if IBM gets over 140 by January of next year. That's how much money you can make on the spread as it stands right now. The cost of the spread right now is $28.50. This net cost is how much you spend on the spread right now. It is aggressive because IBM is underwater here on the puts. And, oh, we do have the 110 calls though. So it's actually 15 times 8 is $12,000. It's $12,000 in the money. And at 125, you would have to pay $4,000 back on the short put, so you'd have $8,000. So, interestingly, on this particular spread, it only cost you net $2,800, but it's $12,000 in the money. How's that for weird? So it's 12. So let's double check the math and make sure I'm not crazy. It's 800 contracts times $15, $12,000. It is $12,000 in the money, and you can buy the spread. It seems too weird to be true, right? And you can buy the spread for $2,800, and it's $12,000 in the money. And if it expires here at 125, if it doesn't go up, you would have to pay these guys back $4,000, right? $10 times 400. And you would have $8,000, but you would still make $8,000 back off of $28.50 if IBM stays flat at 125. How's that for a good trade? These are the kind of stupid options tricks I was talking about the other day, right? It is unbelievable that you can even do something like this. So obviously we're keeping that one. We probably should triple down on it, but we're going to keep that one. Macy's is a 30 times 5. So Macy's is a $15,000 spread. Okay. And how much is it netting? It's netting 22 minus 12 minus, it's about 9,000. So it's netting $9,000 right now. And what we say is a $15,000 spread. So it's got 6,000 left to gain out of 9, which is 66%. And it's going to make that money in a year. and all Macy's has to do is hold 10. I'm pretty confident in that one. In fact, even today, they're positive. So that's a keeper. Pfizer, obviously a keeper. They're the ones with the vaccine. We just took this spread. It's a $7,500 spread, and the net is 12 minus, I don't know, what do you call that? Let's call that 8, 10.5. So 12 minus 10.5 is a very small number, is probably 1.5. So this is a $1,500 to $2,000 spread currently, and it's going to pay $7,500. So that's going to triple. I don't see why we get rid of that. Doesn't make any sense. Tanger family, man, I say family every time. Tanger factory outlet. We covered this one, I believe. And that's just because it had a very nice run, and we're very happy with our profit, and we're in it for the dividends. Oh, I should have made that blue. I didn't. That's my bad. Sell 10 of the 2023 $10 calls for that. So we are covering to lock in the gains. And they're having a good day anyway, so it's okay. But let me fix that right this minute. If it's an action item, we should make it blue. La-di-da. Where is it? Oh, it's way down here. Okay, sell 10 of the things for $350. There we go. Wasn't that easy to fix? And holy cow, I swear, you got to go back and read all the conversations we had on SKT. And Macy's, and well, frankly, and Macy's and Walgreens. I mean, God, the arguments I get from these things is incredible. Like people going back and forth telling me how wrong I am about stuff. And I'm not saying I'm right all the time, okay? Because I mean, I totally blew it on Frontier, for example, right? That turned in. I mean, that's the thing. Sometimes I'm wrong. Sometimes these things turn into nothing. Like they do blow up, but they blow up because management was lying to us. That's the problem. Some things. I mean, the Frontier management told us they were going to do stuff they never did, and they told us they had money coming in. They never did. They said they were restructuring. They couldn't restructure. It fell apart. I can't go. You can't not take anyone's word for it. You can't assume everyone's going to be a criminal. Jesus Christ, we listen to Elon Musk. Nobody caught him yet. But anyway, so as much as I like these guys, we're capping it. But what are we doing when we cap it? We're selling $3,500 worth of calls. So here's SKT. By selling $3,500 worth of calls, we are way reducing our risk because it's already in the money at $10. So we're selling the $10 calls, and that makes our net now is 8,400 minus 2,225 minus the new 3,500 we're selling. So it drops our risk to 2,675, and if we called away at 10, we're going to get $10,000 back from our 2,675 investment. Plus, we'll collect the dividends. That's a good play. And even if you look at the current net, it's 10,460 minus 1,428 minus 3,500. So it's 5,535, and we're going to get called away at 10,000 with almost a double. Plus the dividends, which is hugely, I'm sorry, there are no dividends now. They cut the dividends, but if they reinstate them, we'll be in good shape. And by the way, if they reinstate them and it's above $10 and we're going to get called away and blah, 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 all we're going to do is double down on the stock and sell more puts and calls and do it again. So we're going to keep getting those dividends if they come back. If they don't come back, we'll let the stock get called away and say, yeah, we wanted it for the dividends. SunPower, as you know, is my all-star super stock. It was almost the stock of the year last year. It got beat out barely by gold. Almost reluctantly, I was really gung-ho about SunPower last year. And it finally paid off. It took all year to pay off, but it finally paid off. But this was a conservative spread. but it's a $10,000 spread, and it's currently trading at 32.4 minus 24,350 minus 1,005. So it's only 7,045. Now, it's only going to gain 3,000 more. That's not a huge number, but it's going to gain it over the next year. And also, it's 100% in the money. I have almost zero possibility of this thing not paying off. So the question is, what are we going to do with the $7,000 if we cash it in now? It's almost not worth keeping, but on the other hand, it's like money in the bank. We're going to make $3,000 more. So just let it sit there and make more money. There's nothing, we don't need the money, we don't need the margin, we have absolutely no reason to take it off the table, so why do that? But then that leaves us with a portfolio where we have bulletproof here, very, very confident here, very, very confident here, very confident here. I wouldn't say very, very, let's call it very confident here, and very confident here. So we have stocks we're super confident in. We don't even care if they get cheaper. They're all ones we'd love to buy more and improve our position. And that's our portfolio now. And it's already up $50,000. It's going to be up another $40,000. And I think I under carried the IBM, I think. But it's going to be up another $40,000 at least if everything goes well into next year. And then we're adding this Intel play, and that's going to make $22,900 over 2 years. So we made 50% last year. We're going to make another 50% or so next year without even adding anything else. And we're in very, very conservative plays that we're very confident are going to make it through the downturn, which is obviously starting today. So today's downturn, in fact. Oh, now the Nasdaq is down 2%. All right, good. Everything's moving along. But that's it. I mean, and this is really important though. Like when you do trades, one of the reasons one of the reasons I started keeping a blog was exactly for this reason. So when I put up a trade, I say to myself, okay, I'm spending $2,000 on the trade. I'm going to make $25,000. That means I have an upside of $22,500 over 24 months. Every month, this trade should make $1,000. Then it's on track. If it's not making $1,000, it's not on track. That's pretty simple. Now, when it doesn't make the money, maybe the VIX went up or maybe something else. You have to look at what factors cause your trade not to go up. And there's going to be various reasons for that. And you have to sort of mitigate that when you're watching. You don't just go by the number. You have to understand why this number is happening and what's affecting it. And also, if it is happening, do I want to bail on it or do I want to take advantage of it? Two ways to look at that too. I knew we detailed the IBM. We have a huge winner. We netted into this IBM for credit. Holy crap. And now it's worth $28.50. So it's already up $10,000, $10,800 because it was started with a credit and now it's net positive. So the overall gain, but the spread is potential. Oh no, I did it right. And then it's 24,000 potential spread would be a gain of 32. So we still have 21,000. That is correct. I did the math right there. So this is a phenomenal spread. This could be the trade of the year right here. I'm just not as confident in IBM as I am in Intel hitting its mark for the next 2 years. I still think this is a fantastic trade though. If you're at all bullish on the market, why would you not do this? SunPower, blah blah blah. Talked about like TiVo was a good one before. OIH I thought was a good value, but it's too choppy. GameStop just had a big pullback, so we have to reevaluate GameStop and see if it's worth getting into now. Best Buy also was one I liked. I thought they were crazy cheap. L Brands, you guys know I always love L Brands, but they took off. The biotech took off. This is all from last year, but I mean these have all taken off also. Mittal Steel, I think, had a big comeback. Where's Mittal? That was another one I thought was going to do well. Yeah, see? I mean, that's why I don't like to, I don't like to chase things. So I mean, those things did not become the stock of the year because of stuff like that. Oh, it's right here. Travelers, like I said, best overall bargain in the Dow. But like we just noticed, choppy declining earnings, although it's not their fault probably this year, but still it's a little dangerous. Northern Dynasty I liked, and obviously, they had an up and down crazy year. This is all from last year's picks. Frontier, I was picking actually was a potential trade of the year. I really thought they were going to restructure and do well. Very disappointing, that one. Cleveland Cliffs has really taken off this year. CPRI took off. IMAX is not 21, 25. IMAX is still around 14. But now even though it's lower than it was last year when I liked them, I don't like the situation as much this year, right? But down here, I was banging the table when it was down here this year. Now it's back to a zone where I'm like, it could do good, should do better, but maybe not, and who knows. And that doesn't make it a stock of the year. Lockheed Martin, you guys know I love that one also. And of course, Walgreens, I totally love. Walgreens, very, very close to being stock of the year. And as I said, Walgreens would have been my stock of the year if it had stayed at 35, but it popped up to 41, and I'm not going to pay, more than 10% over, or almost 20% over the price that I wanted to pay. That's crazy. I mean, you don't put people into stock of the year saying that. And SKT, the same thing. I mean, to me, this was a no-brainer, and I've been saying it all year, right? I mean, how many times did I tell you guys, how can you value this company at this price? It makes no freaking sense. And boom, here they are. But that's the thing about value investing, right? You pick a value stock. It doesn't mean it's gonna take off. The trade of the year, I take the catalyst into account. When I do my regular value investing, I'm just picking stock I want to own for 5 or 10 years. I don't care when it takes off. I don't care how long it takes people to realize I'm right. That's not important. I figure one day they will realize I'm right. So when you're value investing, I just want to pick something that's close enough to the bottom where I don't mind sticking with it for a couple of years, even if it gets worse. So that's the timing isn't a thing. But when we're doing the trade of the year, I'm trying to catch the catalyst also. And with Intel, the catalyst is the new chipsets are finally coming out. They're delayed, but they're coming out. You've got the Internet of Things that's going to take back off once people start getting out in the workforce again. Servers and other PC stuff's going to make a comeback again because people are getting back out in the workforce. When people go back to the office and realize they've got computers that have been sitting around for a year or so and are getting kind of old, they're going to start looking at reinvesting and putting things in. And the rise of the robots. Okay, all those robots need chips. They can't kill you if they don't have a chip to tell them what you look like. So you have to get we need a lot of chips before we can wipe out the human race. And even after we wipe out the human race, you're going to need chips for all the robot babies. So it's never going to stop. Intel's going to do very, very well, although there won't be the humans growing it anymore. Ooh, it's getting worse and worse. Wow. So last week on the news, it says that the death rate last week was double what it was a month ago. So we're doubling our death rate in a single month. That's amazing. Dow's down 200 now. NASDAQ is down 270. Holy cow. This is not good. Anyway, it's funny and sad and tragic and everything else. Nobody has any questions. Holy cow, you better get them in now because it's going to be a short webinar. I got a meeting shortly to get to. Let's see what else is happening. Well, that's it for that. Basically, it's not too complicated. Other exciting news that's going on. Let's see what happened. So the energy stocks were gained. We got to look for, maybe there's some energy shorts that we could look at. We'll see what happens. Again, mixed as market looks for reaction to Treasury stimulus offer. This isn't enough. $1 trillion isn't enough, and they can't even get that pitch. Airbnb blowout, DoorDash blowout, 100% gain today or something like that, or some huge number. AT&T valuing DirecTV over 15 billion, including debt. Yeah, well, that was a hidden part of AT&T, and AT&T is another one we picked up recently. Lovesac, I like Lovesac. I have a Lovesac couch. It's not beanbag chairs, it's just furniture. Let me show you. Where is it? It's a nice couch. LOV. I like that you can reconfigure it. It makes it more interesting. Lovesac couch. There you go. Oh my God, this is slow. Seriously? No, I don't want to sign up. I just want to show you guys. Oh, this is way more problem than I thought it was going to be. There we go. Anyway, so yeah, we have one of those. And except that we have like double this much. So you can like constantly reconfigure it. Every single piece can be moved around like building blocks, and you can just keep changing the shape of it. So it's kind of fun when you have a whole bunch of them. And we have that in one of our living rooms. It's kind of nice. So I like Lovesac. I think they're good. Oh yes, yeah, it's more like that. Oh my God, really? So why is it why would the company be doing this well when their website is this slow? But anyway, yeah, so you just move these things around. It's an ottoman, or it can be a thing, and you can turn it into a lay down. You can move it around. When guests come over, you turn it into beds. It's really kind of fun. And it looks a lot nicer than it does in this picture. It's all washy. Oh, look at that. Oh, there you go. See? That's fun. See, with the kids, it's been great. Look at, if you look at this like that, you do that, you do that. It's just, oh, there. See, they're set up for a bed. It's the same couch. You just keep moving it around. So anyway, so I was just curious myself. Then, so going to 52-week high, and I never pay attention to them. I mean, I just happen to like the company, but I never really thought much about them as an investment. What is that? Oh, there they go. That works. What the frick is this? Isn't that weird? Maybe they're not actually public. Oh, love, not sack. LOVE. There we go. So they've been booming along. Let's see how they do. Well, that's interesting. And it's interesting thing what people do during a pandemic, right? Oh, so annually, look at that, 76, 101, 165, 233. That is some nice growth. Don't actually make any money though. They keep losing more and more money. Not terrible amount, but not great. But holy crap, what nice growth. And let's see how it went this year. So so here we are, Q1, 64. Whoa, Jesus, 64.92, 40.54, and 48.61 during the crisis. That's really impressive. Still no money being made. They seem to, oh, here you go. Here's their sweet spot. Oh, but this is useful, by the way. So you say to yourself, how do these guys make money? Well, apparently they hit some kind of an efficiency number. When they get to 92, they actually start making some money. So that's what you got to look for. You've got to say, well, when are they going to get to 92? Well, this kind of growth rate, it's going to take them a few more years before they're profitable every single quarter. So it's still a very speculative little thing, but really nice growth. And I would imagine that they are not very expensive. I'm only guessing that though. Oh, this was my, how do I get to regular Yahoo Finance? Here you go. LOVE. I'm gonna guess less than 2 billion. Oh, 500 million. All right. So 500 now. Company doesn't make any money. $500 million, but they've got $233 million in revenue. They're capable at $90 million. They're capable of making $5 million bucks. You need them to get to 50 million, but now they're too expensive. Bottom line is they're too expensive. They're not justifying that kind of money. So that's a shame because they're not really worth getting. But it is an interesting little company. It's got a good story, but I don't see how. And again, you say, well, how are they going to expand? How much bigger are they going to get, and so on and so forth? It's kind of hard for them to get that big that they're going to justify that valuation, unfortunately. They would have to make, let's say that gets 50 million. So they have to get to 5 billion in sales, and they're miles and miles away from that, and make 50 million in profit, and they're miles and miles away from that. It's not doable this year, next year, 2 years, 5 years. So therefore, it's not a viable thing. Doesn't make any sense, right? You got to get into some better level than where they are now. They're not going to make it there. So no, that's why I haven't been bothered talking about them, because they, at some point, I must have looked at him and said, well, that's crazy for that kind of thing. What else was in the news? Anything else exciting? Disney, our old pals at Disney, 2.1%. People putting up targets. I don't know why, because again, you got no movies are coming out, virus, everything else. The next phase in Disney's streaming strategy is ramping up, leveraging the other studios, blah, 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 blah. I don't get it. There you go. It's another Dow component list. We may as well take a look, right? Look at Disney. Now we'll go back to this and look at Disney's chart. And I love Disney. You guys know that. I think it's a great stock, but not now. So they're back at the peak of where they were. When Disney's down here, I like to buy them. When Disney's up here, I like to sell them. But this one's going to tell an interesting story. On an annual basis, very slow growth. 52, 55, 55, 59, 69, 65. Not the greatest. Oh, and their quarter goes all the way into 930. That's interesting. Oh, so this is like comparing apples to apples. So their growth has slowed, although they've held up pretty well during the crisis. Income, not so much so. Income, 8, 10, say 9, 10, 9, 13, 11, minus 2. This is not going to change. So why am I paying the same money I paid when they made $13 billion? I mean, yes, it's the same company. Yes, the virus will end. Yes, they will recover and do better. But why am I paying that now? I get no discount at all for the fact that there's not a chance in hell that Q4 is going to be anything like last year's Q4. I get no discount for a fact. Here's last year's Q4. They made $2 billion last year in Q4. For a fact, they are not going to make $2 billion in Q1, in Q4 this year. Not going to happen. Not even a possibility they're going to make this kind of money. They might, if we go back to lockdowns, they could be here, minus $5 billion. Even if they have a great year following that, still the 2-year average is going to be close to 0. So why am I paying top dollar for Disney? That's the problem with the market right now. You're paying too much money. It's not justifiable if you sit there and look at it rationally. It does not add up. These are facts. It's not an opinion. It's not something you can say, well, you see it this way and I see it that way. It's like, no. Here is the exact amount of money this company makes. Here is the exact amount of money you are paying for this company. You are, in fact, paying too much money. If I tell you a human being has a temperature of 98.6 in a healthy functioning human being, and the temperature is not 98.6, you don't get to say, well, you know, the economy, the stimulus, blah, 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 blah. That's a tough sell. A doctor is going to tell you, no, 98.6. If it isn't 98.6, something is wrong with this person. It's 98.6 for an Eskimo. It's 98.6 for a naked person in the Amazon rainforest at the equator. It's 98.6. That's the temperature of the human body. That's science. What you pay for a stock is science. It is not an opinion. Or what you should pay for a stock is science. What you do pay is an opinion. And unfortunately, as we have seen in this country, opinions are not science. You are not entitled to your own valuation in a stock. There are valuations. They are real things. Things are worth certain amounts, okay? There's entire professions of people who do nothing but value things for a living. There are metrics, there are books, there's research. And we've thrown it all out the window at this point. And it will not last. It cannot last. You cannot base an entire market on junk science. And you have to say to yourself, what is why? That how is it possible that all these companies are holding up so well in an economic crisis when everything is going to shit otherwise? And it's because of the stimulus, the incredibly misplaced stimulus, which is purposely misplaced, not accidentally misplaced, that does absolutely nothing for the people it's supposed to be helping and funnels money through the top 1% to trickle down in a very small way on everybody else. But what we're really doing is giving $6 trillion to the top 1%, and you can see it. You can see it in the wealth growth. You can see it in the Forbes list. You can see where the money's going. You can see it in Elon freaking Musk, who got, I don't know, 100 and something billion dollars richer this year. 5 times, 6 times his net worth went up this year. Because of what? Not because he sold more cars, not because he made more money. They didn't. You know, marginally, but not enough to justify any of that shit. No, because money has been thrown around everywhere, and it got to him because he's at the top. It trickles right on him. Jeff Bezos too. He got wealthier. Musk got wealthier. All these people are just getting incredibly wealthy because we're paying the consumers to stay home and keep shopping. We're not fixing the economy. We're not making sure there's a job out there for them to go back to. We're just paying for them for the economy to keep humming along. You know, when they give you a stimulus check and you pay your rent, you're kicking it right back to somebody in the top 10%. The money went to you, and you gave it to your landlord, and your landlord's in the top 10%. So that's where the money went. Even that money that you think went to the bottom went to the top. The amount of money that actually stayed in the hands of the people at the bottom is very limited. When you pay off your credit card bill, where's the money going? To the top 1%, the top 10%. Your credit card company is in the top 1%. You're paying people interest. You're paying bankers who are lending money to the credit card companies at high interest rates. That's where the money's going. When you're paying off your leasing company, when you're paying off your rent bills, when you're paying your utility companies, you're paying stockholders, shareholders, people in the top 10, top 1%. You are not putting that money into the economy. You are not building anything of value. You are not creating any lasting jobs. You're just maintaining the status quo. That's what we did with $6 trillion this year. We maintained the status quo and got the rich people richer. did nothing to fix the economy, did nothing to change the economy. Did we retrofit all of our stores and restaurants to be virus proof, or not proof, but whatever you would call it, resistant, to be virus resistant? No, we did not. Did we make sure that every single ventilation system in American public places is an outflow system with antiviral filters and so on and so forth to keep all the air clean and make it healthier for people and allow commerce to continue indoors, allow people to go back to work in healthy, safe offices? Did we set up ultraviolet strobe lights that kill bacteria or anything like that? There are many, many things we could do. Have we done them? No, not at all. We have done nothing to build a virus-free economy. We have basically handed everybody money and told them to pray and wait for a cure or a vaccine. And that's what we've done. That has been and continues to be our strategy as a country. We sit and pray. We are all born-again evangelicals now, thanks to Donald Trump. We have no alternative but to pray for salvation. And prayer is not, this is not a reason to invest. And like I said, I mean, even and it's a good example. I mean, we look at the portfolio and say, okay, we did the same thing with the LTP in the last cycle too. We cashed out a good portion of it because it's just not a good time to be heavily invested. Let the market shake out, let reality hit us in the face at some point, and then we can start investing again. But right now, it's best to watch and wait and see what happens. And even just today, Donald Trump, I don't even understand what they did. I gotta admit, I really was very confused by what happened here. Apparently, election lawsuit. What's going on? Trump says he will intervene in the election lawsuit. What does that even mean? So, I mean, what does intervene mean? How does the president intervene in a lawsuit? Don't play that. Okay. So he will intervene in a case brought by the state of Texas. So in other words, he got buddies in Texas who sued other states alleging election fraud. And he writes, we will be intervening in the Texas plus blah, blah, blah state case. This is a big one. Our country needs a victory. It was not clear if Trump entered it. What does this even mean? Texas announced Tuesday it would be filing a lawsuit in the Supreme Court against 4 other states to halt the electors from finalizing Biden's victory. The Texas Attorney General is on this thing, saying that new processes in 4 states that are not even his state, Georgia, Michigan, Pennsylvania, Wisconsin, skewed the presidential election results, and electors should not be allowed to cast their votes for Biden. The Supreme Court hasn't said whether if they even hear this case, it's going to be a nightmare. It's a publicity stunt masquerading as a lawsuit. It should be the Attorney General should be sanctioned. Good, I agree with that, but who knows if that's going to work. This is unfreaking believable. So we don't. So I don't know if you guys are even aware of this, but this is insane stuff. This is not what happens in a democracy. And if it's even entertained, we've got big problems in this country. So we will see. All right, Rick Anderson, how about DoorDash to 190? No. That's just insane. Randy says, now that the MJ business is underway, have you looked at the emerging psychedelic business? No. I think, look, I smoked pot in college. I have friends who smoke pot in college. I had friends who did mushrooms in college and things like that. I'm sorry, that's not safe. I think marijuana is basically harmless. It's certainly no more harmful than alcohol. as far as impairing your judgment and so on and so forth. That is not the same thing as mushrooms. You take psychedelics and you drive a vehicle, you're a dangerous person. You're a danger to yourself, you're a danger to others, there's no question about it. Okay? That's not the kind of thing you really want people running around taking. And it's just, I would never get involved in that. And I own a marijuana company. All right, so it's just not for me. Robin says, Mo, buy here or wait for correction. Wait for a correction for sure. What's that chart look like? Here we go. I mean, we bought them already. We have them in our portfolio, but you know, they were cheap and now they're back on track. I like them long term. Brian says, if you weren't on BNN, would you do the trade of the year Intel trade, or would you wait? No, of course I do it. Why? Did it go down today or did it go up today? I don't even know what it did. Intel. Oh, it went down a little today. I don't understand. Why would I wait? No, absolutely not. I expected this. I wrote this yesterday. I said, we're going to have a correction. In fact, I think the title of the article was who's going to survive the correction. Yeah. Trade of the year Tuesday, who will survive the fall? That was the headline. I know we're going to fall. I know the market's going to correct. So I'm picking my trade of the year based on the fact that I know we're going to have a correction, but here's the stock I want anyway. Randy says we are not talking recreation. I guess he means psychedelics. But you know, if you mean medical, clinical, things like that, I mean, I don't know. I don't think there's enough evidence there, and I'm too cautious, and it's not something I just don't see it as being a huge thing. I could be wrong, but it just doesn't seem. I think the marijuana trade is way easier because it's inevitable. I just think it's basically too pleasant. This is the reason you couldn't stop it. This is why we had a war on drugs for 60 years and couldn't beat it. It's a really nice, pleasant way to get high. I mean, if you or whatever, I don't know what you would call drinking, but I mean to get high. People do nicotine to get high. People do liquor to get high. People run to get high. You know, whatever it is that gets you into an altered state of consciousness that people basically enjoy. Animals enjoy it. Animals get drunk. Animals eat leaves and vegetables that make them stoned. It's fun. It's an altered state of consciousness. It's enjoyed by many, many people, and that's why you can't beat it. It's cheap, it's available, and it's fun for people. So it doesn't make sense not to legalize it because you really can't fight it. Fighting it is stupid. All right. Do I feel the same way about heroin? Do I feel the same way about whatchamacallit? Whatever that Breaking Bad thing is, I forget what it's called now. Anyway, so no, because some things can lead you to an easy path to destruction. I know Amsterdam, everything's legal. Heroin's legal. Cocaine is legal. But they're successful at it. But I think that's also because pot's legal, and there aren't that many people who go for other drugs. That people just consume marijuana and they don't necessarily run down the other paths because the marijuana is easily, readily available. The cocaine and the whatever, I mean, people frown on it. It's just, if people frown on that kind of use, they're like, well, why don't you just relax and just smoke a joint? You don't have to run around on cocaine all the time. It's not necessary. So I think the harder narcotics, even the mushrooms and stuff like that, and again, I also in Amsterdam, that's legal. I know you can buy mushrooms in Amsterdam. I've seen them in the shops often enough, but it's always been a fringe market. It's not you know, in a readily available culture, it doesn't get the kind of traction that marijuana does. And that's been an experiment my whole life. I mean, since I was in high school, I've been going to Amsterdam. So you know, I've seen it over many years and seen what goes on and what gets sold and what doesn't get sold, and I just don't see mushrooms catching on. I don't see other things like that catching on, psychedelics. I think it's going to be a fringe thing. I think it'll be the same fringe thing as any of those other higher level drugs. So my opinion is it's not something I would really run to get an investment. Anyway, all right. So I do have to run. I have to go to a meeting, and other than that, we'll just see how far down the market goes. What happened to my Thinkorswim? Nope, that's not it. That's Netflix again. What? Oh, that's right. We lost it a while ago. I'm sorry. So looking at the futures, we are now just, I mean, no big deal. We're just sort of retracing back to the lows we had yesterday. So, that's fine. It just shows you that's where we should have been. The stick we had that saved us from that is big. The problem is that we have so far to go before we hit any kind of support. I imagine that this line, or more on the S&P, this 3,500 line might be support, because we tested it here, we came over it here, we came back. Maybe that's going to offer support, but it's really not heavy support. NASDAQ 12,000, same story. Hopefully it's going to be some support. But in the bigger picture, this whole run is insane. And we haven't really, the real support test is going to be around 3,000, 10,000, 1,600 on the Russell. These are big drops if we have to go back to those. A 20% correction would only put us into a situation where we're still consolidating in a bullish run. And that's what I expect. And when we have that, I'll be happy. And when we have that, I'll be very into like buying more stuff. I'm sure we'll find plenty of good bargains at that point. But even right now, the Dow just spiked back again. So, the big they in quotes are not letting this market die. They don't want it to go down. It's artificial, though. It's not real. It's not based on good earnings. It's not based on good reports. It's not based on outlooks. It's based on the hopes of stimulus coming through and covering up all the bad stuff that's really going on under the surface. So I would just say be really careful out there, especially into the holidays. Make sure you got some good hedges. We're going to go over all of our hedges next week for sure, and make sure that our portfolios are as balanced as we can be going into Christmas and New Year's. Because if the market crashes over Christmas and New Year's, you have very little ability to get in there and do anything about it. It'll be thin trading. There's going to be no people to buy your stocks. You won't be able to sell in a panic. So the best thing to do is to have those good hedges in place and be super careful. All right, so that's going to be our big topic of discussion next week, and we'll do it again then. All right, thanks, guys. Have a good weekend.